are moving on to digitalizing the wealth management industry. This is a topic that's near and dear to my heart. I'm not sure what's happening. I think some of you might have some questions. We have great panelists here to discuss this. Again, just to sort of state our rules, which are really no rules. If anyone has any questions and you'd like to ask a question of myself or any of the panelists, feel free to raise your hand and we can go to your question as we sort of sort through the questions that I've asked. I just threw something out to our panelists because I like to do that, make them think a little bit on their feet as they're introducing themselves to think about a book or a song that they think represents themselves so you can get to know them a little bit better. Sometimes I choose the song Living on a Prayer for myself because I'm not sure what's happening in digitalizing wealth management, but we'll get more to that later. So let's begin with Caroline.
Hi everyone, so my name is Caroline. I'm one of the founders of Anaxago, one of the first French equity crowdfunding platform. We recently moved into wealth management because we've been working with retail investors for the past 8 years. So our model has been evolving. So I should tell the book right now. Okay, so that was a pretty... I'm a huge bookworm, so that was complicated to pick a book, but I think I'll pick Magellan from Stefan Zweig about this great ship captain. And if you haven't read the book, you should. It's a great biography of a great adventurer and a very good lesson in management and risk-taking.
The Fintech adventure. Okay, Chris.
Hi, I'm Chris Bartz, co-founder of Elinvar, a digital platform for asset and wealth managers, basically providing cloud-based operating system. And then we provide some applications ourselves, and we are also happy to extend and add third-party applications. So thereby we support different business models. One private bank runs basically their complete DPM and advisory business on our platform. Another large online bank uses us only for the wealth management offering. So different use cases, always providing the platform as a service. And when I got this question, I have to admit the first song came to my mind. I'm not sure whether I would usually pick it, but at least it was the first song coming to my mind. Always look on the bright side of life. So I'm definitely one of the optimists, and even if things sometimes get very challenging, I always tend to believe in the positive of the future, which is true for digitalization as well.
That's true for sure. Lennart.
Okay, my name is Lennart. I'm one of the founders of Nucoro.
Maybe change your microphone to make sure. Yeah.
Okay, we have to share one here. Yeah. Okay. So I'm Lennart. I'm the CEO of Nucoro, and we built what's an investment and savings solutions platform, and we allow financial institutions to quickly launch and build new applications in the digital space, building a completely integral platform that allows you to have the full value chain of asset management automated. And to get to the song or the book, I was thinking probably the book that taught me the most and and very early in my career was When Genius Failed. I don't know if you know the book. It's about the fall of long-term capital management. It's a bit older, but it teaches you a great lesson that even if everything is super perfect, there's always a way that it can go wrong, right? So well, it's good to know that and always to keep that in mind when whatever you're doing.
Very good, thank you. Richard.
Hi, I'm Richard Jones. I'm the CEO and co-founder of FFYN. So FFYN is a platform in the B2B relationships between wealth managers buying funds from asset managers. And so we help wealth managers to follow their products, the investment funds, mutual funds, and to interact in an efficient way with the asset managers. So we are a young startup. We are live since June. Regarding the book, well, difficult question. The first that comes to my mind is a bestseller, so probably that many of you already read it. It's *Sapiens: A Brief History of Humankind*. And one I find interesting in this book is all the rationale that are explained on why and how the humankind has evolved as we are today. And so I think we can use that for explaining how, what are the rationales that are driving us to make wealth management evolving and digitalizing.
Okay, great. So let's begin with the first question that I have here. What are the parts of wealth management that actually can be digitalized? We can just, anybody who wants to jump in.
Yeah.
Yeah, Richard?
Yes, well, I think that digitalization in wealth management, we spoke a lot about robot advisors,
Yes.
some front ends for clients, but I think that's only the visible part of the iceberg, and all the invisible part has not been really addressed yet, and there is a lot to do. I think that wealth management has a long and complex value chain, and I think there is still a lot to do in all aspects of the value chain. So.
People do just think about robo-advisor, but that is only one tip, and I think that's also changing, right? A lot about robo-advisor versus B2B, B2C. Yes, Chris?
Yeah, I would fully agree. So as I'm coming from a traditional private bank historically, so first I worked for Deutsche, then I was working for a Berlin-based private bank. One of the biggest challenges was that most core banking systems are, on the one hand, obviously legacy IT. This is something everybody knows, but they are also very much optimized for retail banking, so traditional transactional banking. That actually starts with a very simple example, at least in Europe. If you go to any given online banking, usually the online banking is not able to show the performance of any given complete investment account, only of a specific investment within the account. So something which is very easy to do actually, and what what you want to have if you have a discretionary portfolio management mandate, is not possible in traditional online banking. So all private banks have to build their own back-end system. And so I think, yes, everything will be digitalized as the general answer, but especially in wealth management, providing the respective back-ends and then building good front ends is a very, very key part.
Can you be more specific? Maybe one idea?
So yeah, in the end, it's about basically using the retail banking platform, which you usually have on the transactional side, and then building a backend which allows you to do the individualization for your client, to access much more investment products, to do all the specific calculations like the performance calculation across multiple assets, maybe even performance calculation across multiple investment accounts at multiple banks. Supporting advisors, supporting family offices, taking care of all the different reports. So there's a lot of back-end processes which today are done manually or via Excel, and I still believe that the tech with the highest usage in wealth management is actually Excel, and this is definitely not the future. So for that reason, one of the goals we have internally is let's get rid of Excel in wealth management.
Yes. No Excel. Yes, Caroline?
Well, digitalization in wealth management, for me, is about giving access to everyone to wealth management, because I think that's, private banking historically has been lacking digitalization. I won't talk about my banker that I have to call, my private banker that I have to call anytime I want to make a money transfer. And when I told him that that would be cool if I could do that, through the internet, he said, yeah, that's a big project for the bank. So there is a lack of digitalization in this area, but to me, something that has been underestimated by Fintech in the wealth management is the investment opportunities underlying the wealth management service that you give. I think the key in the wealth management industry is to be able to provide good investment opportunities, especially in the world of low interest rates we are experiencing nowadays. And I think that historically, retail investors have been forgotten in this world of good investment opportunities. So that is what we're trying to do, making wealth management accessible to anyone and everyone, from a low minimum investment ticket, with digitalization as a channel to make it accessible.
Yeah, Lennart, what is your point of view on the whole digitalization of wealth management?
So in my opinion, it can be really completely automated, and we're extremely far away from that happening. So if you look at the technology that's applied in large financial services nowadays, it's protocols from the 90s, mainframes. So it's really far away from the ideal stage. And this makes it super difficult for them also to innovate, because they have so many little bits and pieces that now somehow work, but as soon as you start taking out one piece, it stops working, right? So that's what stops innovation as well, and what needs to change. So there I agree, it's the front office part, so the front end, and it's advancing quite well, but everything behind that, so middle and back office, they're still in the stone ages when it comes to technology. And I think there, it's difficult to do. That's what we try at Nucoro, is building this integral platform that allows you to launch something new, because it's just so difficult to deal with the tech debt that you have internally, right? But yeah, this has to change, just so that advisors, for example, they get empowered by new technology and even new front ends that allow them to help get more people into wealth management or investing. But then afterwards, they still have to deal with Excel, with paper forms, etc. And this needs to change, right? So because it's very inefficient, very costly, right, to manage a business like this. And if you would build an investment solution nowadays, you wouldn't build it like it is, right? So.
That's for sure. We're picking up the pieces. We touched a little bit about robo-advisor, and certainly we've seen just that definition of robo-advisor, whatever that might mean, change over the years. And we've seen firms move from the B2C model to more B2B, in terms of digitalizing the advice section. It's been difficult for the B2C firms to onboard clients. It's been very expensive for them to onboard clients. I think the promise of that didn't really occur. So how do you see sort of that space? You want to start, Caroline?
Well, very shortly, it's not my experience area, but I think in my mind, the B2C model of the robot advisor, as I said earlier, was completely forgetting about the underlying investment opportunities. It was the onboarding process was great for most of them, but it was only an assessment of your risk profile, and then you were being offered product that was distributed from a bank partnered with the robot advisor. So, and that's the part where you're supposed to be making money when you are an investment actor. So I guess that the B2C model wasn't working because of that. But I think that the B2B switch is a great idea because, as we said earlier, private bank and traditional banking actors lack this expertise of great onboarding and the no paper area.
Let me throw one other question as we move down to just Caroline. Is robo-advisor just for millennials? What is the digital appetite among different generations?
Is it because I look like a millennial? No, I think robot advisor are for everyone because, as I said earlier, I mean, it's a way to assess your risk profile and to make sure you're like empowered in your financial decisions. Yes. So it's really, I mean, in France at least, it was a huge success for not only millennials, but people from 35 to 55 looking for new investment opportunities and willing to make their own decisions. So now I think it's a great thing if that's being integrated in more institutional structures.
Okay, Chris, you want to talk a little bit about that? B2B, B2C, is it for millennials? And I'm going to throw one other thing in for you, which somebody was just talking about, aging in place. So for people who are aging, can't digital wealth management be a great solution for them?
So first of all, about this B2C, B2B thing, from my perspective, if you look at wealth management, there are three main components. One is you need a strong brand, client reach, trust. So really, you need to be someone who people trust. Second thing is you need investment expertise, the investment products which we just mentioned. Third is you need leading technology, or should have leading technology. The early play of the B2C robo-advisors was basically a play on brand. So what you did, and you see that the successful ones were the ones who were able to establish brands, even if, for example, they use the same products and the same technology. So some of them are built on the same old tech stacks. So it was really a game on brands. Then you saw that this is a limited game, so there's not so much room for additional brands. You could even argue that this industry is over-branded and there are more than enough brands. I would say then there came this switch to B2B, and there you saw that quite a few didn't build their own technology, and that's why they failed. So you cannot do a switch to B2B if your USP is on the branding side because your B2B partner already has a brand. So this is only working if you have if you're truly focused on tech, and not many are focused on tech. So for that reason, my personal hypothesis is that this is not going to work for most players. Picking up the other question.
Yeah.
On the older generation, I would actually say there's a huge opportunity in serving also older people with modern technology. And you see that on something very simple. When I started working at this Berlin-based private bank in 2009, that was actually 2 years after the iPhone came out. And we did a focus group with the richest clients of the bank because there was a recent takeover and we wanted to know how they think about this. And everyone at the table had an iPhone. So the idea that technology is only for young people is actually completely wrong. What you see is that technology nowadays...
Can you say that one more time, please, loud?
The idea that technology is only for young people is just wrong. And you see that today technology becomes much more accessible and it is actually not for nerds anymore, but the early adopters are rather...
One more time on that too, not for nerds.
I would say the interesting thing is technology nowadays, you could actually argue, the early adopters of the most newest fancy devices and the newest tech are actually the ones who can afford it. And that's our very on a usual basis or on a regular basis, the older, more richy and more wealthy people. And there was one study that if you want to have an indicator for the wealth of someone, actually Apple is a pretty good indicator. And that's even true for neighborhoods.
They're mobile, they're global. I mean, why wouldn't they be?
Absolutely. And to be fair, even if I politically completely disagree with him, one of the best adopter of technology and social media is quite an old guy.
Yes.
In a White House.
Or girl. Yes, no, 100%. If you check, our nice sponsor here, Capgemini, a World Wealth Report, you find one of the highest appetites for digital is among ultra high net worth, among the wealthiest, mobile, global, right? And why wouldn't it be? Lennart?
Yeah, and I think that's just to pick up on that point. It's absolutely true. And I think one of the key reasons is they have money to test out new things, right? And the brand and the trust factor, I think, in this space is extremely high. And people just don't, even if it's now 2020, people just don't send over their life savings to an unknown brand online, right? So there's this big hurdle of getting the trust of clients in order to actually make this proposition work. That's why the ones that work, they spend fortunes on marketing, and the customer acquisition cost is crazy high. But it has to be because otherwise you just don't get the brand equity with the clients.
Right.
But that's why I think the incumbents that have already the trust, they need to find the right solution to launch these products because they will be the future. And in 20 years' time, how likely is it that somebody will still go to a branch and actually invest their money with a face-to-face meeting, right? There will still be those people, but the vast majority will not be used to a bank clerk anymore, right? Or a private wealth manager probably, because they have built new technologies and user experiences that make it just easy to do it yourself. Right? And you are in control of your money thanks to technology. And that's what I think a vast majority also of wealthy and older people want. They know they've been charged way too much, in private banking, and they just want to try out different things and take control of their money.
Okay, Richard, you want to weigh in? What about the B2B, B2C?
Yeah.
Do you think that Lennart's right?
Yeah.
We're going to go all the way toward digital?
Yes, and I can only agree with all as what has been said. And I think what is interesting is to look at the client angle and the employee angle. And the adoption of technology is a bit different. And I will come to that because in our private lives, we all use nice applications from leading tech giants, and it's changing the way we behave and we interact with people, we exchange, we are more engaged with families, and also with product and with causes we like. And I think people want to have the same experience in their interaction with their wealth managers. So they want to be more engaged, more interactive, and also they want to manage the impact of their wealth because they are able to do it through these social networks too, and they want to do it through their investments. And so it's asking a different attitude and different product from the wealth managers. So people expect more customized products. And I think that's where robot advisors can help the wealth manager to tailor the products to the expectations of the client. On the employee side, from wealth management firms, I think it's a little bit different. On the private side, people, even if they are older, they love the new way of interacting. In the professional lives, people may have done the same job since 20 years in a way. And even if they understand and would like to move to the new way of doing things, it's more difficult because they have to change their habits. And so I think as firms, wealth management have to drive the change and be very focused on how they manage the change in their organizations to help their employees adopt the new technologies.
So that brings me to a question. I mean, I started my firm over 11 years ago just to help wealth management and just to differentiate themselves. But where is the competition coming from? So you touched on that a little bit, Richard. Is the competition coming from the wealth manager or the bank next door? Or will the competition be coming from a technology company in the future?
Well, very good question. I think the battle between...
crystal ball? Yeah.
There will be a battle between tech giants and financial institutions. I think financial institutions have learned a lot in the recent years about digitalization, and they will start to behave more like fintechs and adopt new technologies. On the other hand, tech giants are already there and have a big audience. So I think it will be an interesting battle, but there will be one, yeah, sure.
Chris, what do you think? Who's going to win?
I think the question is, to be fair, not that good. So even I loved all the other questions because it's focusing too much on industries as a competitive question. And from my perspective, I think the biggest change is that we don't have one player doing everything, fighting against another player doing everything anymore. What we actually have is an ecosystem with a lot of players with very unique core competencies. And the key question you should ask yourself, are you able to identify your core competency and do you have one at all? So a lot of banks, if you actually ask them, what do you different than anyone doing something comparable? Yes. The answer is pretty much exchangeable. And this is something what is going to change. So if you don't have a clear USP, it's very hard to provide a sustainable business in the future because technology leads to transparency, it leads to accessibility, it leads to availability. So only if you have a clear USP providing added value for the rest of the ecosystem and the clients, you will be there. If not, you will be challenged, whatever your background is.
Yeah, Lennart, what are you betting on?
Yeah, I think there's well, we have to differentiate also between retail products and institutional products. So institutional, I think, will take a lot longer to have large tech players actually make a big impact. On retail, for sure. I mean, they're on mass market retail. Apple, Google, they will launch, or Amazon, they will launch financial products, and then they will be adopted by a lot more people. And there, if the financial institutions don't wake up and do something now, well, they get left behind on at least on the retail side, right? Then they still have the institutional business, but then it's a matter of time. But I think it's going to be one of the big brands that will take the game because you need this brand equity with clients and the trust. So that it's a new startup, it's quite unlikely. I mean, they will be bought at some point, right, by a bigger brand just to save the sinking ship, right?
Yes.
So.
Brand equity, Caroline, what do you say?
Yeah, I think that building trust is, as you said, that's the first step of wealth management is being a brand that people can trust. But about competition, what I think is that the digitalization of wealth management will enable startups to target customers that weren't targeted by a wealth management firm in the very beginning, because as young startups, we address young people. We address the end risk, high earnings, not rich yet, but looking for a solution to build their wealth. And until now, they weren't addressed by private banks. So I guess that competition will come later on when they'll be rich enough to be addressed by this private banking institution. But in the meantime, that's a free road that we have to take.
Last week I read something that I was a little bit surprised about, but not shocked. I read PwC called wealth management the lowest tech industry. The lowest tech industry. I think that's something we've been feeling, but why is that? Does that make a huge upside? Is that because there are not enough products? Is that because the average age of a financial advisor is around 60 years old now? Is that because clients don't want it? How can we do a deep dive into this and understand why would wealth management be the lowest tech industry? Chris looks lean forward to that.
Yeah, I mean, I have a very strong personal hypothesis on this, and I would love to discuss it and to hear your ideas around this.
Lowest tech.
My personal hypothesis is based on the one hand, a lot of wealth managers and wealth management units actually are in a situation because of the fact that they are part of a larger group, that they are always a last priority. So if you look at the group in total, and whatever the large group is, I don't want to name names now, but I'm sure you can think about some in France, some in Germany, some in the US. It's always about retail first, deposits, cash, payments, credit, and then at some point in time, because of the lower number of users, they think about wealth, but basically then it's wealth has to live with the rest, and then they do something. And on the other hand, the wealth management units, exactly for the same reason, are used to bridge topics manually and via Excel, because they actually have a unit economics that this is still profitable. So for the simple fact that the single client is so economically profitable, they can allow to have 3 people doing something manually for him or for her. And for that reason, you end up with a situation that they say, okay, we still do this manual because this is the one exception we don't want to care about, and we go for the standardized retail product process on the one hand and the manual wealth management process on the other hand. The challenge now is
clients though toward
exactly, and the challenge now is that clients say, okay, how come it that I'm the super rich guy or I'm the super rich lady and actually get a worse digital experience, and I cannot access my portfolio and my offering on the iPhone, in comparison to my daughter, for example, who can do everything she wants to do on her mobile. And so you end up with situations like this, or be it transparency about products I use, be it about other challenges. So now actually the wealth management ends up with the challenge that, as we just said, tech is not for nerds anymore, but tech is actually for the rich people, that they have a very demanding client group and no clue whatsoever how to solve this. And that's basically the opportunity now arising over the last 5-6 years and going forward.
Richard, you want to jump in? And now, just to add to that mix, I mean, isn't wealth management a relationship business, and how does that fit into this conversation?
Well, yes, it's a relationship business, of course, with a lot of customization, and so you do very specific things for all clients, and there's probably a break to automation. I think that's changing. Well, we see banks that are now detaching some developers within operations team and to work with them on a very small project, 15 days project, to make things automated. Then I think artificial intelligence is the elephant in the room here, because it will help to manage all this customization. So I think we are at the start of digitalizing the wealth management industry. I think we underestimate how big the change will be in all aspects, from portfolio construction, operations, client management, all these things. So yeah, I think it will come. It's starting now only. Yeah.
Are we late? Are we right on time, Lennart? Where are we?
I think we're late is far from the point where we are. I think that the main reason, and to follow up on your point, absolutely right. I think this is the cause of all of this is that the margins just have been incredibly good in wealth management, right? And then there was just no need to invest in technology, because somehow, as you said, you buy Excel, you buy specific things, tools that do the job, but you don't need an integral solution to fix all of this, because, well, you just made so much money, they don't go away, right? The stickiness of wealth management is very high. You go to one bank, well, you have all your relations, all your assets with one bank or 2 banks, but you don't switch banks every day, right? Because it's very difficult, and, well, it's a complex system, and to change that, I think it's very complicated. Just from a reconciliation perspective of illiquid assets, etc., it's not as easy as retail banking in that sense to solve from a technological perspective, which is another reason why this never happened, right? Because it's quite a complex matter to solve. But I think, well, it has to happen now, thanks to MiFID II. People get more and more aware of how much they're actually being charged. And then this will cause, well, you already see that, right? Private banking is getting into trouble because they have to disclose how much they're charging. People start asking questions, demand lower fees, and as soon as they make less money with it, well, then they have to find more efficient ways to handle the day-to-day business.
I read once that people said that many baby boomers thought a lot of the bank wealth management services were free because there was not a line item that said fees. So nobody could figure out how they were paying, and they thought those services were free. So, Carolyn, you want to jump in on that? Digitalization and what the opportunities are for moving forward for us.
Well, I can only agree with everything that has been said. I think that new regulations will give transparency and a huge change in traditional private banking models. I guess that the thing is that wealth management will not be only about in the future. In the future, it won't only be about how do you preserve your money, but rather about how you build wealth, how you build a relationship of trust with your investment counsel, and how you, meet your life objectives with a financial strategy. I can talk about it because I'm French, and Richard will, I guess, follow me on that. But we are very shy when it comes about money. We don't talk about money. You can do 5 years of finance studies, as I did, and nobody will explain you how to make your first investment, how to balance a budget, and how your financial planning should be helping you meeting your life objectives. So, to my mind, digitalization of wealth management will be about that, like the new mindset of people who will be rich in the next 60 years. In the future.
So as you can see, there's a lot of upside we have here in the digitalization of wealth management. Maybe we're just on 1.0 now, but certain lots of areas that can be digitalized and probably will be digitalized quickly as things change. So how about a big round of applause for this panel? And we're going to switch to our next panel, so thank you all.